What they're hiring me to do is basically run the Kata challenge
Yeah,
on three future contracts,
yeah,
which is basically the S&P 500, Nasdaq 100, and the Dow Jones 30.
yeah,
Um, and what we've agreed to do is that I'm going to trade the micro futures on
yeah.
them. Allows for better position sizing and all of that. Also, I think just kind of out of observation over the past week, um, it seems that the futures are uh, I think once I get used to the futures, it might be a bit more profitable for me to trade the futures than in the ETF
Yeah,
because a lot of the move happens and then you have the ETF gapping and nothing happens,
right.
you know. But very similar to the scenario we had during the elections and
Yeah.
or when we get like big data releases at 8:30 New York.
Yeah. So let me just say right here at this moment, what research shows is that the uh after hours trading after the close and the pre-market trading before the open has no predictive value for the follow through of the rest of the day.
Yes.
And so they are tradable, but with a slight caveat that it's its own trading session with its own psychology, and don't expect it to follow through. It might, and you can expect explosions when all of the off hours market stuff is resolved, and then the opening, whatever gap that created, then has to get processed, and there's likely to be a big move as a shock to the big gap, which catches everybody that wasn't trading the aftermarket or the pre-market, catches them by surprise, because now, or it's just the size of that move now requires them to take action to rebalance their positions according to rules, which then generates follow through momentum. So that's why big gaps give big follow throughs, but then sort of reverts back to the new normal.
Yeah.
So when you're doing that, you just got to recognize that that is its own psychology, its own volume, its own volatility. The futures allows you to trade that. Now, the good news is that the things that you're trading are liquid enough in that after hours market that
Yeah.
you can actually justifiably use descriptive statistics for our patterns.
Yes.
That's not always true about other things that have after hours trading that are so thinly traded that there's not enough data and order flow to rely on the herd.
Yeah.
So, in that way, it's more like continuous trading with currencies, but currencies you get that periodic blip when the trading offices come online, but it's not a formal event that you get in the equities, which by law or by right says this is exactly when it's coming on, and they can't trade that in that market until that happens. So the relative size of the explosive moves at the open and close is larger in the equities than it is in currencies.
Absolutely.
But having said all that, that's why trading those three particular contracts is feasible, but just don't over explain or over expect that the follow through is going to happen. It can,
Yeah.
and there will be some gyrations. The larger the gap that there is, there's still that move, but it's really you should really look at that as two separate events.
Yeah.
Okay, back to you.